Hi, I'm Carrie Nash. What's your mortgage IQ? The reason it's important to know about mortgages is because it's likely your largest investment opportunity. So whether it's a purchase or a refinance, we want to make sure that you're well educated to avoid some costly mistakes. So we are on our second step in the 3-step series of what's important to start out on your first home, what you need to know. In the first segment, we covered down payment. Today, we're going to cover income, the second part of that qualifying process. So income, a lot of people are paid a lot of different ways. The first thing that a lender is going to look for is how long have you had your job? Have you had it for a couple of years? The easiest income, if you will, of course, is if you have a 9-to-5 job, what we call W-2 income, salary. You are guaranteed those hours. You work your 40-hour week and that's your pay. That's a very standard way and approach for a lot of people for their income. And as long as you have been there for 2 years, we're going to use that hourly rate. If you happen to receive overtime or bonus, we certainly consider that in your income. Likely we'd like to see a 2-year history of that as well. There are certainly a lot of other ways that we all make our income. There's the self-employed, those people who say, I go out and I hit the streets every day and we'll see what I make at the end of the year. That's going to be very important for us to look at your tax returns. Now, depending on how long somebody has been self-employed, we can look at possibly a 1-year history on that if you've been in the business for maybe 5 years or so. But a standard would be to look at a 2-year tax return. We'll look and see if you are a Schedule C or possibly you have a partnership or an S Corp, and we will walk through those numbers. As a matter of fact, a lot of people actually don't recognize how they are paid if they're self-employed, and they say, oh, my accountant does it. Well, it's our job to figure out your income for you. So whether you're self-employed or whether you're salaried, we can look at that. Perhaps maybe you have 2 jobs or a part-time job. We're going to use your regular job, that regular pay. If you have a part-time job and you have a 2-year history of it, it's likely we can use that income as well. Where we run into a little bit of a challenge is if somebody has just picked up a job. Let's say they become an Uber driver for extra income. That extra income is great, but if we don't have a 2-year history of it, we're not quite certain what that income is going to be in the future. And lenders and bankers, we like to know exactly what that income is going to be, that we can count on it, that you can sustain this monthly payment for your house payment. So, a lot of factors to actually consider on your employment, and people necessarily don't understand how they're paid, and that's, again, our job is to figure that out for you. So the best thing that you can do is make sure your taxes are filed, make sure that you're keeping your pay stubs and your W-2s. If you're self-employed, making sure that you have all your records together, because that's one of the vital things in getting approved for a loan. So we're going to want that information. So I hope this helps your mortgage IQ, and it's the second step to getting approved for a loan. If you like this content, please subscribe to my YouTube channel so we can help you increase your mortgage IQ. I'm Carrie Nash. Have a great day.